Okay, good afternoon or good evening, everyone. So we have the futures opening up today, and it looks like the Nasdaq is still trading south. Can't really tell if this is, anytime it opens up a little lower, it's not a good sign. Yeah, it's not, wow. Bitcoin is down 7%. It's getting pretty nasty out there. Might be good for a strangle. Who knows? Nobody will know exactly what's going to happen tomorrow. I don't even know. This is going to get nuts. Russell's up 0.22 at the open. Bitcoin is down negative 7%, down below. I can't believe just a couple of months ago, Bitcoin was trading at like 60,000, 70,000. Now it's at 35. I think it's going to go all the way down to like 11,000 in my opinion. Okay, so let's first take a look at the current position going into Monday and Tuesday. That's a TGIF cycle. The first thing, I am recording this, so what I want to do is I want to go and take a look at main server 102. And also just take a look at what the current positions are in the retirement account. So I think it's just Tesla. It's shorting Tesla still. In this specific account, it's making $3,000 as the market's crashing, right? And Apple, it's made about $1,225 as the market is crashing, along with Amazon. And everything else is just, a lot of charts look pretty broken. But for option wise, I have NVIDIA. And before we talk about the market structure, the S&P, and before we talk about other markets and talk about what's happening in the markets in general, I just want to talk about my position first. So it's a position that's got really no bias. A little bit of bias. We got puts and calls, and this is technically a strangle. I know some people use the word strangle for options a little bit differently than I do, but basically the way I form a strangle is basically I use I buy puts and calls on the same same contract week generally, and then it's a put and call, and basically with the volatility, I'm expecting the volatility, the price action moving north or south, up or down, to be over 5 or 6% or more. And this week is going to be extremely volatile because not only do we have this BLT set up on NVIDIA here, okay, and there's probably a lot of BLTs. That's a 10% move down to 210. Let me see which contracts I got. So I've got the $200 puts. Okay, so if somehow NVIDIA drops 9% from now to Wednesday, the $200 puts will most likely be worth $5 to $6. And if the market does something funny and decides to move up for some reason, because I think that's where the 6-day moving average is. 6-day moving average is at 254. Then we got the 255 calls, which we purchased at $1.82. Now, position sizing is obviously, you can see if you take a look at the allocation amount, 1% and 0.5%. So it's like, $1,000 and $500, and that's 10 contracts each. And that would be, so if any one of those contracts moves from say $1 to $7, that means each contract is going to be worth like $500, $600, which is basically about approximately $500 net profit on those puts. So this is the type of, whenever you get in a doji position, right? I'm gonna clearly explain the powerful doji candlestick. Like here, look at that doji, and you can get a little bit of shake and bake at the open, and then finally decides, it'll pick a direction, and it has a good chance to move up to 254, right? To retest that 6-day moving average, which happened on Thursday. And then, but at the same time, this thing can just puke. Like the futures, the futures are green, and we don't really know which way it's going to go, right? It was trading lower. And actually, I should be trading futures right now, but here we see that BLT can throw up into Wednesday, and I don't want to close those positions until probably Wednesday, either one of them. But if any one of them moves up toward 254 or 210 on Monday, then obviously we're gonna close it, right? Because NVIDIA drops all the way down to 210, you can see then it's going to be 10% extended away from the 6-day moving average, right? That green dot. Okay, so in the community, if you join a Discord community, the architect or the trader, the main trader, it's that person's job to make sure everyone is using like the same moving average, because if everyone starts using their own moving averages, then you're making different moves based on the moving averages you select. So we recommend, if you're going to be in this trading room, I recommend using the 6, 8, and 21, and then if the market's crashing, then you want to have the 50 and the 200-day moving average, maybe the 100 moving average in there as well. Okay, if you're in a bull market, you just want to use the 6, 8, and 21. But if you're in a bear market, then you want to have them all on, right? So price on this BLT and NVIDIA, if the market decides to puke, then we'll get lucky. Maybe it pukes on Wednesday, maybe it pukes on Monday, but we don't want to close those off because there's a good chance it just bounces to 250. That means our 255 calls will go from 182 to maybe $4, $5, $6. Okay, let me just check on the option chain. Ooh, S&Ps. Yeah, I should have. I don't want to trade futures while I'm like presenting, but let's go ahead and take a look at this. Internals. Okay, this is all. Let me see if I can log in. Yeah, it's not going to let me log. I got to restart this system. How annoying. Yeah, I think the futures are green. That's brutal. Yeah, let me see if I can quickly pull up this taskbar. Yeah, I hope everybody had a good weekend. I think I had a pretty good weekend, and it was. But when I took a look at what I like to do once in a while is when I take a look at the charts here. We have the stock charts, like from here. See, look at every single stock in the market is like literally is bending over. That looks like something like someone's bending over, right? Every single stock chart is. Oh, look at Shopify. Like I thought Shopify was. I have a friend that works there, and he's always talking about buying a place, and yeah, I don't think he's going to be buying a place anytime soon. Roku, that's our number one strategy, and it's been bending over multiple times. Roblox, that's the Nancy Pelosi one. PayPal, like what's going on? And NVIDIA, 200-day moving average. It should tap that. Like if you see that chart, you know, if you're using these moving averages, you think about stock charts, they have their default moving averages at 50 and 200, and you know, it's just giving you the template, the long-term moving averages where the so-called institutionals think about buying. But yeah, I mean, the 200-day moving average is right there, 220. I don't see why I can't hit that this week, maybe hopefully Monday. But every chart here looks like it's throwing up and just getting annihilated. And unfortunately, it's the U.S. People who have jobs working at companies contributing to their 401 or IRA. They're getting hammered, right? And it's fine because this is market cycles, and maybe new employees are being hired, and new funds are being created. But yeah, this is a normal, typical pullback correction. Eventually, they'll all make 52-week highs. I don't know if it's going to be this year or next year, but it's going to be a pretty big year in the next 2 years for sure. Okay, because eventually these things will eventually start to run up higher. But let me just get this Thinkorswim up and talk about. Oh yeah, futures tried to bounce. I don't know what that's going to look like at 4 o'clock a.m. Eastern time, but that's so far it looks pretty bullish, but you know, who knows. Let me load this up. Thought it was already up, but my bad. Yeah, anyways, I hope everybody had a great weekend. I didn't see too many trading supplement pictures of fancy steaks, but I had a lot of steak over the weekend. As you may know, I love eating ribeye steak or tomahawk with the bone in. I like my internal temperature at around 120 degrees Fahrenheit, and then sear it for about 2 minutes on each side on a cast iron using unsalted butter. Just some information that is not very important to anyone. Let me just type this in. Okay. I'm actually going to eat another steak today. Strip sirloin, grass-fed, aged 28 days. Just thinking about it right now. Somebody cooked me a well-done steak, and I almost threw the steak at their face. Never cook steak well done. All right, market internals. Wow, look at this. So yeah, we can, from just the market internals, we can see that the VIX is trading slightly lower at negative 0.95%. That's kind of indicating risk on. Ooh, we took the buy the F and dip tier 2. Okay, so as someone who I have a lot of experience, and I've, you know, when I was monitoring and doing the back testing on these market internals, I've lost a lot, but then later on, all that journaling really helped out. But here, there's the buy the F and dip tier 2. Okay, so right there on the Yuval Deval, we've hit negative 600,000. And I think if you watch some of the previous videos, actually this was what I was expecting. We should see some sort of extreme move to either the buy the F and dip or the sell the F and rip. So on Friday, we got the buy the F and dip. Now, is this like 100% certainty that this thing is going to bounce? Well, in terms of futures, you can see it bouncing. Okay, so it does look like it is working, and the buy the F and dip doesn't necessarily mean that the magnitude of the rally is going to be like a 3, 4, 5% in the futures. Okay, it just means that there's a higher probability that this is an extreme move, and having a little bit of an oversold condition may induce a small little bounce, which is being kind of seen here. And we don't know, we know how long, we know what price it has to get above in order for a new trend to begin. But as long as the S&P and the Nasdaq here, let me just blow this up here. So the S&P, the Nasdaq is what I'm showing here, and it made a new low. Okay, so every time it makes a low, this bubble forms. It tends to bounce. Okay, and the rip your face off rally could end up happening on Monday. Okay, so that's why we got the calls and the puts on Nvidia. And if you look at the allocation on that strangle, I put we have 1% in the calls and 0.5% in the puts, and that's because the buy the F and dip triggered, right? So if the buy the F and dip triggers, why wouldn't you put more in the calls than the puts, right? Why would you put more in the puts, especially when it's down when Nvidia was down already like 5%, right? So we'll see if it bounces, and if it bounces and we get that rip your face off rally, then this candle right here is going to do exactly what it did on Thursday. It's going to move as close to that green dot, just like here. Can everyone see the, oh, that's a nice piece of steak there. Oh my gosh. Oh man. Can everyone see the green dot right there? So that green dot is the 6-day moving average. So on Thursday, you can see that little wick. Okay, and I remember that day I had puts on Tesla and it didn't work. Then I got back into the 940s, right? But it ripped pretty hard on Thursday to just tag it right there on the 6-day moving average, right there. And that's what it could do on Monday. You can see that it opened up at 14,400, and it's moving higher, making that wick. And it can make the wick all the way up to 14,800. Okay, and if that happens, then obviously the calls are going to start printing. Okay, and then the puts are going to start dying. And that's good. So Nasdaq is up 0.54%, and that's great because our calls are going to start printing, but our puts are going to start dying. However, the next plan, what I'm going to do is you're not going to close those puts. Those puts are now going to probably drop from 98 cents to 50 cents to 40 cents. And then whatever profit you make on the Nvidia calls, so let's say you make 300%, then you'll use maybe half of the profit and buy more puts, because and then probably not the same puts, not the 200, but you'll probably buy the 220, and you'll try to buy those for about $1 or 50 cents, as cheap as possible, right? So it's a little too early to tell. Like, this is definitely, we're in a downtrend, and we have Jay Powell speaking on Wednesday, and with the VIX kind of rolling off down 1.68%, this is short-term signal that the VIX is indicating risk on. Okay, so the main plan here, what is this? Yeah, that could be a little bounce and then just drop into the abyss. So I think the Nasdaq is going to try to stage a rally up to some sort of moving average. I'm guessing the 6-day moving average, because this is not a reversal candle. Nothing here looks like a reversal candle. Reversal candle looks like this, with this long doji, but then it failed. Okay, and then it rolled over and started to dump. This one doesn't look like a reversal candle, so we have to be careful that we're not going to assume that this is the bottom. And when it moves all the way up to the green dot, we're going to close our long positions and start adding into our puts, okay, because they will be cheaper and they will be drawing down. So let me just take a look at the cost. So being in a strangle, especially when the volatility can get really crazy tomorrow, is nice. because you don't have to really pick a direction. And if the move is ginormous, like 5 or 6%, either way, you make money, even if one of those strikes lose money. So the 255s, which I picked up which ones did I get? The 255s. So I bought them at $1.82. But if you got in 10 seconds into close, I guess the best price was $1.69. And then if NVIDIA runs up this magic mic here to 248, right? Everybody knows what a magic mic is, right? Because this is a BLT with a magic mic. So it's either going to ride that pony up to 248 and then stay under the 6-day moving average, or it's going to make a BLT and throw up all over your bacon, lettuce, tomato sandwich and dump all the way down to 210. Okay, either way, it rides that pony or dumps. You got to pick, but we don't know. Okay, but the market internals is suggesting buy the F and dip, and so we'll just assume a bigger position, but we'll strangle it. And then you can see from the NVIDIA implied volatility, it's saying 80.8%. 80.8% is pretty high for implied volatility. And that's pricing an 18% move, $18 move, let's just say 20. Closed at 233.74. So add 20 to that, that's 253. 253 takes us one strike under the 255s. And then you can see at the money calls for NVIDIA is trading at 10.20. So one out of the money is $8. So we go from 170 to $8. Okay. If you have 10 contracts, which you picked up for, 5 or 10, whatever your balance is, you got to figure out, make sure you position size carefully, right? If you have 10 or 5 contracts, then the 5 contracts will go from $1,000 to $8,000, right? Okay, and then 8,000 minus $1,000, you've essentially made 3,500 net, right? And then the $200 puts, okay, if those are going to drop from $1 down to 30 cents. Okay, so we'll watch these carefully and not close it, because we're going to take some of the profits from the calls and then add into the 215s or the 200s, because NVIDIA, thanks to Jay Powell on Wednesday, he could dump this really hard into the 210 here, the gap, right? Because that gap is going to get filled for sure. Okay, so please understand what I'm saying here. This is a strangle. So either way, it's going to if the move in NVIDIA is more than 5%, well, for the upside, if we get a bounce from here to here, if we get a 7% move on NVIDIA on the rip your face off rally, which is increasing in probability since the futures is up 0.66%, then we're going to move from 233 all the way up to 250, which will mean that our contracts are going to be worth around 650 to 750 by the end of Monday, or maybe even at the open. I don't think NVIDIA is going to gap up like 5% at the open. It could gap up 5% and then hold it for another 30 to 60 minutes and see if you can close it at around 650 to 750, and close half, right? Or all. I think for me, I'll be closing, if it reaches 250 on Monday, I'll close off all, except for one contract. I'll leave one contract, and then at the end of the day, I'll look at the puts, or look at the puts on Tuesday, because they're going to be drawing down, but I will not close them, because I will watch them and look to take the profits made from the calls and add to those puts because I am going, they will be much cheaper, and I'll be using profit to add into the volatile event, JPAL volatile event on Wednesday. And then hopefully this gap gets filled at 211. So then if NVIDIA drops from 255 down to 211, then those contracts, the $200 puts will go from, well, right now they're trading at $1. They'll draw down. If NVIDIA moves up 7%, then the $200 puts are going to draw down from $1 to like 20 cents, or maybe even 10 cents. And likewise, the 210s will draw down from $1.75 to 50 cents. So these are the ones that you want to look to add into using the profits that you got from the 255 calls, because that's, I think, NVIDIA is not going to get above the 6-day moving average. It's going to stop right there on Monday. So it'll open up like here, run up, and then pull all the way back, or just stay there. And then on Tuesday, it'll pop up one more time and then roll over. So it'll be like this. Let me put on a 30-minute time frame. So that's where the 6-day moving average is. So it rips up to 255 and then maybe goes up a little higher into Tuesday and then rolls over down and fills a gap on Wednesday, Thursday, and Friday. So we might get another sell-off like we got last week. I don't think there's a chance. I don't think NVIDIA is going to fill the 335 gap anytime soon. So my best guess here is it just tries to tag that 6-day moving average, and then I'll look to add puts on Tuesday, 10:30 a.m. Eastern time. Okay, depending on how strong this rally. Like, I don't know how strong this rally is going to be. I'm just taking a guess that we're going to move higher on Monday. And then if it, let's say on the 78-minute, is there anything happening here? Nope, nothing there. And on the 30-minute, nothing there. Okay, so looks like the futures are going to stay green into Monday. Okay, fine. If it doesn't, then by 4 a.m. Eastern time, it's all red and crashing 2%. Then that's great on the call, on the puts. We don't know, but either way, you want to know what your plan is. So the plan here is basically if it's ripping up higher on Monday, then we're looking for a move up to 253, 252 by the end of Monday. Anytime it gets there sooner than later, obviously you got to manage your risk, especially when your positions are up 100%. When they're up 100%, then the rest of the contracts you can hold into 250 to 253 and then close them out. You don't want to try to guess if it's going to push through that 8 and then go to the 21 for that ET. You want to just stick with the trend. The trend is lower. And then on Tuesday, we'll look to see if it gets a little bit of more of a push, but add more to the NVIDIA puts for the reversal, and then it's going to drop and fill this gap. There's actually a couple gaps here. There's the 211 and the 206. Let's take a look at Tesla. So Tesla has a pretty interesting looking wolf wave. They do have earnings this week, and earnings is obviously binary, which means there's really 50-50 chance that you're going to pick the right direction and also get the magnitude of the move that you're expecting. It's less than 50%. But there is a wolf wave, and it looks like maybe Tesla opens up a little weak to fill that gap, and that wolf wave is suggesting a quick move up to 1012, which is almost the same thing as what I was talking about with NVIDIA, right? So you can see Tesla sold off really hard into Friday. It had a little bit of a shake and bake. I think I was in those, which puts were they? The 920 puts. and I think I got in at about $1.80. They actually went as low as $1 on Friday's open, but I didn't close it, and you shouldn't have because the algorithm was still short, and it moved all the way down to about $3, $4, $5, $7 almost, all the way into the close. But I've already managed all the profits there, and then I did a couple day trade on the bounce because the bounce was right here, right to the UTL, sold off and made another 200, 300%, 100%. 150%. And then this wolf wave appears, okay? So that gives you an idea that maybe there is a chance that a rip your face off rally develops on Monday, and your target is exactly the same target that I described in NVIDIA, right? It's the 6-day moving average. So this wolf wave is just showing that there is a setup in Tesla, but it's recognized a pattern. So it's a little bit cleaner, but it doesn't really matter. It's just the price of what the ticker that you pick for the bounce for tomorrow. They're all going to try to make a move toward the 6-day moving average if the market remains green from now till the opening bell. Okay, just because it's green right now doesn't mean it's going to be green all day, all night long. We don't know. Okay, no one will know until after we close positions. But either way, we don't have to worry too much because we have a strangle. So we're basically strangling it to give us some profit, and all we need is about a 5 to 6% move, and we're good. We're good. Okay, so that's the plan. So let's go back to the market internals and then talk about this crazy market. So the trend developed a very persistent profile. You can see the yellow cloud here, very beautiful. This is very consistent in the volume activity, and hitting 2.25 with the buy the F and dip trigger tier 2 indicated that we're going to get a short-term bounce. The magnitude of the bounce is unknown, and the magnitude of the move will be dependent on the move on the VIX. The VIX is the volatility, okay? The volatility of the fear. So right now, fear is trending higher, and I believe it can move a lot higher. However, it's now kind of looks like the fear is just kind of tepid at best, and I don't know. I think J Powell could easily spike it up and dump the market even further. So this is not the easiest market to be trading, but volatility is coming back in, and the more volatility we get, the better the bigger the moves. All right, so let's go ahead and take a look at the S&P futures and take a look at the daily chart. So the wolf wave that we have, as you may know, we're the first Discord server and also the first trading view that has the wolf wave. This wolf wave is pretty damn good. It's one of the best, and I wouldn't be surprised if you are aspiring to open up your own Discord server trying to make other people rich. You definitely need to have some sort of edge, and this wolf wave is a great tool to help you find some very nice asymmetric trades. Now, right now, there's nothing asymmetric about this S&P on the long side, but on the downside, it's already the asymmetric move from the 52-week high down to this target here is already being achieved. And believe it or not, the S&P looks exactly like NVIDIA. I mean, in terms of the position of where the 6-day moving average is relative to the current opening price. It looks like Tesla. It looks like a lot of stocks. It looks like Shopify. It looks like everything is trading well below the 6-day moving average for an attempt to bounce up to the 6-day moving average on Monday and then simply roll over. And there is a gap here at 4,000. Okay, that gap is about 8% lower from where it is right now. So your account, this market is going to drop another 8% from now, probably all the way into, Apple's earnings. So I made the assumption that Apple was going to be the trigger that causes the market to sell off. So I was assuming that the sell-off was going to be, we're going to consolidate into the Apple's event, but it looks like that was incorrect. It's already in the process of correcting, and there's another 8% left. So this gap here at 4,000, that's going to be coming from Apple. So Apple announces earnings, and if it's brutal, if it drops like 10%, if it drops by 5%, then the S&P is going to drop by 10%. And that will be the bottom. And if we take a look at Apple's 200-day moving average, that's the 100. Where's the 200? Holy cow. The Apple 200 moving average, if we look at it together, it's exactly the same. Like, this is crazy. It's exactly the same drop. The move from where it is right now down to the 200-day moving average is exactly the same drop as the S&P, dropping from where it is right now down to the 200-day moving average. Isn't that weird? Or is that, let's do side by side here. What? Where is my gap? Shoot. My gap is gone. Where'd it go? Here it is. Customize a gap finder. Okay, and then go back to here. And then go to here. Yeah, so here, this is what I want to show. This is pretty scary stuff, but the S&P here is right at the 200-day moving average, and I think that could be like, obviously the sell-off, this straight down move is going to create a little bit of a bear flag and then drop all the way down to here. Okay, that's what I see, bear flags, right? And then you can see these short-term pullbacks that actually kind of ended up becoming double tops and even making a higher high, but then, you know, it was just basically chopping and then rolled over around here in January and then immediately sold off into the 200-day moving average and looking to bounce. So that bounce, how high this thing goes, my best guess is right to the 6-day moving average. If it does stage a little bit of an aggressive bounce, then I would say the 8. But let's just say 4,500. That would be the bear flag, and then it starts dropping all the way down to this gap right here. And if we measure this move, that's 8.86%. If we look at where Apple is to the 200-day moving average, that's 8.8%. Okay. Now, is it by coincidence? I think not. I think this is this was all planned. But overall, Apple is in a massive uptrend since 1980s. So you just have to. I mean, if you're gonna hold on to Apple, then obviously this pullback here is looking like another buying opportunity. But it sucks. Like you have all the tools and the resources for you not to go through like a 40%. 20%. How much of a correction is this? So let's say you bought Apple here and then you're up like 45% with a $100,000 account. So you're up 45,000. So from 45,000, it pulls back another 10, or another 10 to 20%. So you give back half your profit. And, some people are okay with it because you you're looking for the long term, 5 years. But the short term wise, that's a $20,000 drawdown on your profits. That's not what you really want to do. And taking a look at other stocks like ARK, this is definitely, you definitely don't want to be meddling with the Woodster here. That's this chart looks like a divorce. Okay, this is how divorces are happening in the States. Yeah, this is just garbage. Okay, you go through a divorce, all that artificial pain that's created from this market, and you're just basically paying Kathy Wood, the fees that she wants so that she can live a happy life and continue to act like a charlatan. This is really, really nasty. This is divorce territory, okay? So here you're on a honeymoon, everything's great. Kids are going to Harvard, tuition's paid for, and then boom, what the hell's going on? Despair, and then boom, divorce. 50-50. Got to split your property with your significant other and all the assets. And you don't know, like this thing could even drop, I don't know how many gaps there are here. Oof. Yeah, I don't know which one of these gaps are going to get filled. It could go down to $40, but I'd say if I had to just take a guess, like after the 200-day moving average, I don't know what's lower than that. But I would say the gap for ARK is probably going to get filled at $60. That's my best. I don't think they're all going to get filled and go down to $14. That'd be crazy, isn't it? It could actually. So what is this? That was November. So December here, it dropped by 26%. And that was off of a Nasdaq 10% drop. So then I guess if the Nasdaq drops another 10%, then the Woodster can drop down by another 26%, right? So that would be here down to, so maybe 48 to $50, like around here, maybe the top of the gap. So yeah, $50. I think if we use ARK ETF as a bellwether for growth, we want to start looking to go long ARK at around, well, not long ARK, but long growth at $50 when ARK reaches $50. Okay, and then if you have no idea about trading, all you gotta do is just turn on the Hikinashi candle, and if once this candle turns green, okay, hopefully it's the beginning of the trend, because the last time it turned green, it didn't really trend higher, right? And I guess that's because of the interest rate talks that's coming from the Jay Powster. So hopefully Jay Powell has a different stance on the interest rates, but it looks like it's going to get pretty nasty, and a lot of lives are going to get, I don't know what's going to happen on Wednesday, but it could get pretty damn nasty. My game plan is to either decide to manage my strangle or to hold the strangle all the way to the end of the week. And it could be a fantastic trade just by doing nothing. But I will definitely look to manage those positions that I have right now. And it's pretty simple. I'm not looking to open up anything right at the open. I'm looking just to manage that strangle. So the S&P is definitely looking like it's going to go to 4,000 sooner than later, probably on the Apple earnings. And let's see, futures are up 0.7%. So kind of reminds me of Thursday night's rip your face off rally, and then it immediately reversed, right? So that is something that is likely to happen again on Monday. So things are going to bounce. So we have those calls, and we want to manage those calls into the end of the day, and hopefully we get the volume to pick up and get past the capitulation line and even follow through into Tuesday for a nice little sell the F and rip rally, okay? And that would get us up to the 6-day moving average and slightly above, maybe to the 8-day moving average, and then close all those calls. Okay, so hopefully we get a nice pre-market. What I want to see for NVIDIA, I want to see NVIDIA trading on the ask above 233.74, and then it'll start to run up that magic mic, and we will close the positions probably by the end of the day. It'll probably take the whole day, but if it gets there sooner than later, right? If it goes from here to here within the first 30 minutes, from 233 to 255 within the first hour, you got to close. I think it's best to close everything except for one contract. But if you only have one contract, then you have to really close it all out. Okay, because that 200-day moving average, all these charts eventually tap that moving average at least once. And I think if it doesn't tap it on Monday, it's going to tap it sometime on Tuesday after 10:30 a.m. Eastern time. Okay, that is the researched number. That's a number that you never should forget if you're trading. Okay, that number took me 6 months to figure out. 10:30 a.m. Eastern time. Okay, ever since I've been doing this Discord channel, I've always talked about 10:30 a.m. Eastern time, Tuesday. That's called TGIF. So that's the plan. Bounces up to the 6-day moving average, and if you're a big baller brand, you can hold the positions into Tuesday and squeeze out a little bit more profit, like a pimple, and then pop. It's going to roll over, add back into those puts, because those puts are going to be cheaper. And then let's hope for the best on J Powell's dump, because when J Powell dumps the market, it gets really nasty. You do not want to be looking to go long calls if J Powell wants to dump, and the market could dump when J Powell wants it. J Powell is basically the market's laxative. We got to be careful on Wednesday, but who knows? It could, I could be wrong, and if we get a close above the 6-day moving average, then hi ho NVIDIA. There's a lot of gaps above it. Like let's entertain the idea of a gap. NVIDIA making 52. I don't think NVIDIA is going to make a 52 from a chart like this. But the gap is there, okay? And that's what we want to, that's the 211 gap. So that maybe even opening up, adding puts at the end of the day on Monday would be a great plan. Well, we'll just wait to see how the futures. I would like to trade the futures right now, but I'm in a presentation here. So okay, so buy the F and dip triggered, and everything is going to move. Looks like it's going to move higher. So we have long calls. The probability, the proportion, the allocation was correct. So 1%. I mean, it would have been better to have no puts, but it's only, you should have half. Okay. Or 20%. Half was aggressive because I was also considering the probability of a BLT to the downside happening on Monday, which is now not likely to happen. But either way, I'll still make profit because I have 1% 0.5% more in the calls than the puts. And then as long as Nvidia makes a 5 to 6% move and gets back up to 255 or 250, those contracts are going to move from $1.80 up to 650 to 850 by the end of Monday or anytime during Monday. So you must understand that. And risk management, basic risk management principle, Nvidia calls move from $1.80 to 360. That's 100% profit. So you've got to manage your positions at 100%. Close off half or whatever you need to close off. I'll be closing off half and then hold the rest for a little push up to 350 to 355. Or if you're really confident, if we're able to interpret the market internals a bit better, right? And we can see that the ticks is changing the profile, the edge here, red from green, then we can hold the positions all the way into the end of the day, watching the UVOL DVOL increase at an increasing rate up to the capitulation line, up to the 0 line, and then see if the gradient continues to persist all the way up to the sell the FN rip indicator, which would be awesome because then we can take those profits from those calls, figure out how much of that profit we want to add into the $210 or $200 puts because those things will be getting hit, and then look for the reversal on Tuesday, 10:30 a.m. Eastern time. So there's a lot of, we have a general idea of what I'd like to do for myself in those strangles, but we got to wait obviously till Monday's open. And then we know that markets get a little bit choppy on Tuesday after 10:30 a.m. Eastern time. So we should prepare for that, the choppiness going into FOMC. So last week's market dump was pretty damn nasty, and it will probably most likely continue to trade lower. But as the market stages this rip your face off rally, you want to make sure that you are understanding why the market is going to rally and what is the edge here. So the edge was the buy the F and dip. Wow, the market futures are really, I should be really trading the futures right now. Oh well. Okay, so let's just give me a second here. Yeah, so if you have like if you have some common shares or stuff like that, and you're just holding some stocks of Apple or Amazon for the long term. So let's take a look at Amazon together. Wow, Amazon, oof, man. Look how extended that is. 2 double bacons. And it's obviously going to try to bounce. Ooh, man, look how nasty that is. And we were trying to play that for the A7, which didn't work out. But, oof. That doesn't look good at all. But this is very similar to the NVIDIA, Tesla. Well, it probably looks like a lot of the other stocks where you get the price trading way down here. And it's the 60 moving average is way up here. So how much of a drop is that? It's extended by 6%. That's a lot. You don't get a lot of 6%. Like if you look at on every extension, so this looks like it was really extended, like up here. And we measure it where the 60 moving average is. It's only about 3%. So it's 2 times the average. I would say that would be the average extension. Like this one right here, where it reached up to that point at 3,345. Okay, that's a 6%. So that's a 6% extension. And that quickly reverted right back to the 6-day moving average. So in Amazon's case, this is probably going to revert right back to the 6-day moving average to 3,100. So that could be a, I don't think you're going to get into Amazon quick enough. Maybe, depends on the pre-market, but that's another rip your face off rally setup, right? Because look at it. And let's take a look at our Tesla. So look at that. Tesla didn't even feel that gap, right? And it was damn choppy. So Tesla is not extended as much as, or is it? Yeah, it's kind of extended. Yeah, it's about 6% away from the 6-day moving average. But it didn't fill the gap, and there's another gap here at 848. I don't think that gap is going to get filled, but look at the 200-day moving average at 810. So, and there's a gap that looks like it's going to converge toward that 821. A lot of people, I mean, honestly, people on, I've been watching these people make these YouTube videos about Tesla and how great the company is. It's a great company, okay? That doesn't mean the price of the stock can be manipulated, okay? So people are spending hours and hours and hours researching on YouTube garbage, and there's a lot of people who are really good at keeping track of the accounting information for Tesla. Fundamentals is like, to me, just confirms that the company is solid. And then if you're able to live longer than the company, then yeah, I'm sure you're going to have a lot of wealth being generated from the shares price of the share appreciation. But most likely nobody's going to outlive a company. So you have to figure out what your plan is in order to capture a good amount of that appreciation in the share price. So when I look at Tesla and the fundamentals, it's great long term. Short term, it looks like it's giving everybody a discount, but we don't know going into this binary event. Is the Tesla share price, is it going to take out all the gaps and drop after earnings 12.87% on purpose, and then rip higher? Right? Everybody will get pretty hurt, but it could rip higher after that, right? Triple top. And you won't know. No one is going to know, okay? Because the price action right now is not trading off of fundamentals. It's trading off of basic J-Powell anxiety, interest rates, okay? So this is, I think Tesla, after earnings, is going to hit 828 and tap that 200-day moving average. The last time it hit that 200-day moving average was over here, which was about 163 days ago, which is a year ago. So I don't think it will hit that 200-day moving average because it already spent so much time around the 200-day moving average back in 2021. But this is something that no matter how much accounting and discussions you have with people, even the accountants working at Tesla, they won't know which way the price is going to move after earnings. No one will know. Okay, the only person that will know is the hodlers, because after the announced earnings, you'll know where, what the hodlers are thinking. So that's Tesla. Google, right? It looks you want to short it, but you got to look at how extended it is away from the 6-day moving average. So I think we get a little bit of a bounce up to the 200, which is a 2.47% move on Google, which is average. And then it rolls over and J-Powell just dumps it hard. Big dump from J-Powell. So short every rally. And if you're going to short the rally, make sure you short it 10 seconds into the close. If the rally is so aggressive on Monday, and for example, going back to the NVIDIA example, and NVIDIA moves from 234 and goes up to 252 really, really fast within the first hour, then look to short NVIDIA 1 hour into the open. But if it doesn't and it takes the whole entire day, then short NVIDIA at the end of the day. Okay, and we won't know how it's going to move toward that 6-day moving average tomorrow until we see, what the futures look like and also how the market internals play out. All right, let's look at the watch list on 750R. So 750R is just a basket of stocks that I've designed to generate around 70% gross in my portfolio. A lot of people are making money. A lot of people are pretty happy. But here, Apple, it does look like the downtrend is in, but you're going to get a couple of bounces along the way. Nvidia looks exactly the same. A little bit of a bounce and then rolls over and dumps into 221 and maybe 210. Shopify, my God. Yeah, like I said, my friend, he was planning to invest to close out his Shopify position and buy a house. I don't think he's going to be doing that anytime soon, so I feel very sorry for him. Tesla, exactly the same thing, extended away from the 60-day moving average, just like Shop. Shop is actually more extended because it's dropping like 10%, like very often. So where is it? So that from here to here is a 13% move. That could be something that's worth it, but if you're going to get into like a bounce, I mean, I would really encourage everyone to use the wolf waves, because I think a lot of wolf waves are going to start producing some pretty decent signals. But not quite yet. So Netflix, oh my God, Netflix this looks like someone's bending over on purpose, and yeah, just a complete disaster. I have no idea what's going on with that. That got really beaten up. Roku to the Broku, same thing. So I don't know how many more gaps that this can fill, but strategy-wise, this was the #1 strategy. And it will be once it starts to, start to trend. And it looked like it was going to trend here, but Netflix definitely got it beaten up, and it does not look good for now. But it could rally quite hard tomorrow because of the extension away from the 6-day moving average, right? So it's extended quite a bit from the 6, and it is, if it just does a mean reversion type of move, that's an 8% move. Okay, that's an 8% move in Roku, which is something that you could day trade tomorrow. Boeing, worst chart in the world. Okay, this is, I think when you look at this chart, I think you can make more money at the casino than trading this chart. This is pretty nasty, and it looks like, believe it or not, there's a gap wide open all the way down to $121. So if the S&P drops to 4,000, Boeing can see a lot of these gaps get filled. Be careful. Coinbase, obviously speechless, and most likely going to gap down another 10%. So because Bitcoin is down at 36,000. Let's keep on moving forward. Facebook, Metaverse, the most no offense, but Metaverse is, I don't quite understand it, but there's a gap here at 284. However, you cannot buy puts until the end of the day or until it gets up to 317. My point here is, if you're going to try to buy puts, you better make sure you got like a strangle in there, because you don't know which way it's going to go tomorrow. It's going to go lower tomorrow, it's going to go higher tomorrow. You just need to manage your risk, right? And if you have 0 positions into tomorrow morning, then what you want to do is you want to know how to trade at a price level. So here at this price level, you don't want to be buying puts, because this is quite extended. The best time to buy puts is when it pushes off that 6-day moving average and moves lower. Now it's way lower, so you're late. So what we got to do is you got to wait for the price to move back up to the 6-day moving average so it can push off it again and fill this gap. It's obviously in a downtrend, and Jay Powell on Wednesday could break that trend and start pushing stocks higher and making new 52-week highs. But you don't want to try to pretend that you know what the Fed is doing, right? Because if you did, then you'd be working at the Fed. So this is it's all about risk management, and it looks like it's Facebook is going to take out this 283. Most likely we could get another Thursday, Friday. Like Friday, we got the puts to pay out. Maybe we get the same market characteristics. However, it depends on what JPOW does on Wednesday. If the market ends up becoming, I don't know. We'll just have to wait till what JPOW does. But last week and this week, last week Thursday was a super rally up to the 6-day moving average, and then they sold off into the close because of the trend hitting 1.1. So that was Friday. And then here on Thursday on the trend, it hit 1.64, right? And then whenever you get a trend value that high, you need to know that the markets are going to pull back. And it did pull back really hard on Thursday. And then we got follow through with the VIX pushing higher for the sell-off into Friday. And that could happen this week as well. So Metaverse, Facebook, whatever that garbage is called, I think this company, Facebook, whatever, is going to go bankrupt. I just don't understand its purpose. But who knows? If they keep on, if the marketing industry starts to pick up, Facebook could end up becoming a leader in this space. But this virtual world stuff is getting a little bit creepy, in my opinion. So I don't know. Snow, no idea. It looks like it's not snowing anymore. And we should have probably bought puts, because as soon as it stopped snowing here in Vancouver, snow started to drop, basically melt. And TSM, I don't know what this is. This is some Taiwanese semiconductor manufacturing. So yeah, the only semiconductor company that I really care about is Samsung, the motherland. Samsung. Okay, so that's pretty much it for the 750R. Let's go take a look at some of the things on the watch list. Airbnb, wow, look at those dojis. Yeah, actually, you want to take a look at the Roku dojis. Remember the triple Ds? So that triple D here produced a pretty sharp rally off that a daily wolf wave. And that move was 7% or 8% from here to here. That was crazy. I saw those contracts, those 180 calls go from like 70 cents to like $5. But then it completely reversed. So it gave back 13% and dropped almost 20% in 2 days, which would have been crazy on those puts had you shorted it right here. But you see, you can see what I was talking about with NVIDIA, where you want to short it at the 6-day moving average. But here in Roku, it actually pushed through the 8, right? And I think the only way you would be able to tell in this case that shorting it at that level would have been after how many cycles into the pump, like 1, 2, 3. So maybe 2 and 3 would have given you some idea that maybe after 1 or 2 would have been after 2 cycles. So that would have been on the 30-minute time frame. There was nothing there, but on the regular time frame, yeah, there was a TTM squeeze on the regular time frame, right? So it gapped up on Thursday off that, and then started to move on that daily wolf wave, and then it triggered cycle 1 right here, and then 2 and 3. So right here, this is where that reversal rule on that TTM squeeze comes into play. I don't know if if you take a look at the candlestick pattern here, where it created this magic mic pole and then it proceeded to move higher again, that would be considered a double top. And then you would have tried to buy puts into Roku, okay, if you were really looking to buy puts on that. But for NVIDIA's case, when you look at it, NVIDIA is, if it does bounce, I'm looking for the bounce up to that green dot, and that's an 8% move. Any 8% move in NVIDIA is nuts, right? And in a rip your face off rally, 8% is normal. Okay, so we with the information that we have from the market internals, this is an extreme 4 standard deviation in the volume that's saying that the whole entire market is extremely oversold. But that doesn't mean that it's the bottom, and that doesn't mean we're off to making new 52-week highs. If we make new 52-week highs from here into the end of the year, man, we're gonna all make a lot of money. But I'm just not sure that the S&P or the Nasdaq, I don't think that looks like a reversal candle. So let's take a look at what a reversal candle entails. Okay, so a reversal candle here is like a doji, and then you get a move up higher. You can get these long wicks and double bottoms. See, double bottom here with some dojis, right? And the doji here, double bottom, and then it kind of dumps again, and then makes a low. Like how do you know that you got a full legit reversal? And honestly, you're not gonna catch it with precision. So look at this. Look how difficult it would be to trade this if you're looking for a bottom. This right here is the epitome of why we manage risk, because we don't know any one day. We don't know which way or this thing is going. Just randomly, just moving all over the place. So, but generally, with if the price takes out the previous day high, like here, candle over candle, or a double bottom, these are markings of a reversal. So if we look at the Nasdaq right now, I don't see like much of a, like maybe these two candles here represented a double bottom, but I don't need to know that this is, I don't care about the bottom. All I care about is, I can clearly see the price, the arbitrage from buying calls here at 14,425, and then the mean reversion because of the extreme volume shown in the UVol DVol. You don't get it down this level very often. Okay, so you gotta understand that that doesn't happen very often, and you have to buy calls. But because of the uncertainty of the market, we should strangle. And then the nice part about strangling is that one of those legs, they're gonna make money if the rip your face off rally happens. And rip your face rally happens a lot when you get these oversold conditions with prices being extended 5 or 6% or 10% away. Okay, so this is going to bounce. Then we close off the calls, manage our risk, take some of that profit, and buy some cheap puts. Right, buy some cheap puts going into Jay Powell, because Jay Powell is gonna dump the market. He's the market's laxative, makes everything go down. And then we'll profit on both sides. Okay, so that's pretty much it. I don't have that's what I expect the market to do tomorrow. A lot of people are expecting the market to bounce, and I'm not going to disagree with that. I think it will bounce because of the market internals. But at the same time, we saw last week Thursday it bounced, and then it quickly reversed from positive to negative. So having the volatility is definitely in the market, and we want to make sure we try to catch at least both sides of it. And there's a great opportunity for this week to see the market dump even more, because you can see that the S&P has that gap down here at 4,000. That's I think that's when the bottom will be in. Yeah. I don't know what most technicians use after the 200-day moving average. Is it the 1,000-day moving average? It's kind of funny. So yeah, I think we're bouncing tomorrow a little bit. Okay, we won't know for sure until the market opens, but I'm feeling pretty good with those strangles, and hopefully we can strangle some profit out of our positions and then stick with the plan. Should the market continue to rally and rip your face off rally, then we're going to be like rocking, because once we close out those calls, we can quickly flip them into some puts, and then let Jay Powell handle the rest by drinking a couple of tablespoons of that laxative, and then dump the market hard. And what I said about people with 401ks, or some people who just hodl like Apple shares, then yeah, this is a great opportunity to keep on buying Apple down to I would say 147. Okay, so Nasdaq and S&P hit the 200-day moving average. I don't see why Apple can't do the same thing. And if Apple bounces up to 167, they have earnings coming out on the 27th, which is what day is that? Ooh, so there's a fantastic opportunity. I mean, you saw last week that Apple, we were in the 167.5 puts, and I think they ended up becoming worth about $4 by the end of Friday. If Apple moves up to the 6-day moving average, we can do the same thing and see 3 days where Apple drops into Wednesday, Thursday, Friday. Okay, I think that is another trade that I might open just to open up maybe 2 contracts or maybe 10. Okay, depending on if it ends up trading up back above 168. I'll buy some puts going into I'll buy some puts on Apple Tuesday at 10:30 a.m. Eastern time, and then let Wednesday's dump, figure it out, and it could roll over all the way down to, I don't know, are there any gaps here? There's doesn't look like there's any any clean gaps on the lower time frame. Not much there. Let's take a look at AMD. Oh my gosh. AMD's looks exactly like NVIDIA, right? And if you compare AMD and NVIDIA, they look exactly the same. It doesn't mean this is clear footprint of the market, where the algorithms in the market are clearly in control. So why is the market difficult in trading? Is because we're trading against algorithms. Like AMD looks exactly like NVIDIA. Like here, I'll post NVIDIA. They look exactly the same thing. They're trying to target that 200-day moving average, right? And humans are not going to be trading enough in volume to create the same shape. Like this is the same shape. It's crazy. Duplicate. If I put this side by side, they look identical on the daily. And I put on the moving average. How do I hide this thing? Right? Other than the ticker's name, what's the difference between the chart? Do you think Bob, your neighbor, and Jerry, and Janice, and Lisa, they're trading NVIDIA and AMD such that the chart patterns look like exactly the same as NVIDIA? Of course not. This is all algorithms. It's like playing chess with the Grandmaster mode set. You're not going to beat the machine. Okay, most likely none of us are going to beat a Grandmaster chess computer machine, which they've done these tests back in the 80s with the blue IBM machine, right? They put the Grandmaster up against the IBM blue machine, and guess what happened? It lost the first time, but then it started dominating. The machine started dominating. Okay, you just can't beat the machine. So this is all machine generated footprints, and everyone in the world can see that 200-day moving average in NVIDIA and AMD, but when you look at that buy the F and dip there, okay. And how many times have I told you this buy the F and dip level and it bounces the next day, right? It happens a lot because we can see it on the internals. This is your car instruments, airplane instruments. These are the gauges that you use to help you understand, what your risk and reward is, instead of just looking at the price of some sort of stupid chart. Okay, charts are good. They provide some information about how you model your your boundaries, your upper and lower boundaries, and draw your triangles, showing some sort of supply and demand drawings, right? Triangles, flags, pennants, whatever. But volume is volume. And that volume right there is oversold, okay, in the market. That's a 4 standard deviation move. And as a result, we are almost forced to buy calls because that doesn't happen very often. And we'll see what happens there. And as a result, with this oversold condition where you got the BLT to the downside, yes, I know that that's a BLT candlestick combination for a downside move down to 108 in AMD, but at the same time, the market internals tell me we got the rip your face off rally, buy the F and dip, tier 2 triggering. So I need to also manage my risk to take into account the possibility and probability of a rip your face off rally back to the 6-day moving average at 127 for not AMD, I'm talking about NVIDIA, right? And they both look the same. So how do I know, how do I pick between AMD and NVIDIA? Do I look at this quant flow? Do I look at cheddar? No, you don't. You look at managing your risk. You look at managing your risk and sticking to a plan. That quant data stuff is garbage. Every time I keep on looking at it, I'm so disappointed that I paid those guys $1,500. We're getting rid of that garbage. It's almost like let's just say I'm not very impressed. All right, so that's the plan. Nice little bounce into NVIDIA, and then we buy some puts, add some more puts, and then let's take a look at some other charts. Let's look at Alibaba. Oof, man. And just looking at this chart gives me a stomach ache. Oh, man, the pain. I have a friend who has lots of Alibaba shares. I don't know what to say. So, find a better Chinese restaurant to dine in. That's just garbage. BKNG. Oof, you can see this gap right here at 2020. Man, this market is gonna dump. Berkshire. Let's see Berkshire. Berkshire is doing great. Berkshire is not doing so good either. How much is it drawing down by? 6% is not too bad. I mean, most people can handle that. I don't see any gaps. I don't know about those gaps. Okay, so BYND. Well, let's actually go through, because I'm just looking like I'm just guessing here. So I want to go through the my 750R list, go on the daily, turn on those wolf waves, and just see if there's anything that kind of pops up, right? At least on the daily. Roku. So Roku definitely it gave us a good opportunity on Wednesday into Thursday, and then Netflix pretty much told Roku to bend over, and Roku quickly bent over like super fast. So now it gapped down. What could happen here, because of the extreme oversold status of Roku and into a quasi TGIF cycle in Roku, it could actually open up inside day at 156 and then proceed to fill the gap at 166 by Tuesday. Just keep that in mind for a possible trade setup. I don't see, even on the 70-minute, you can see that there could be a little bit of a bounce. 18% bounce. Yes, not bad. I mean, the risk and reward is pretty good, right? You risk like 200 to make. So imagine if it does move up to 18% by Tuesday, by the end of Tuesday, and you get the 1 170 calls, which are trading at, well, I probably wouldn't even get the 170 calls, but what I would like to do is I would like to get the earnings related positions, right? Because I don't have to worry about the decay. But that's the problem. What is Apple going to do to the market? Roku. So looking at the implied volatility, whoa, there's something big happening in Roku on January 28th. There's some big news, because look, you can see that the implied volatility for this week for Roku is at 111%. So that's crazy. Usually earnings, which it's scheduled to have earnings in the month of February, that's where the IV should start to increase, which it is. It's at 98 and then drops down to 93 in February 25th. So there's something coming up. There's something happening with Roku, maybe news related, because of the IV at 111%. That's really high. So I think watching out for Roku for a possible bounce is not a bad. I mean, I know people don't like trading Roku, but if Roku bounces off that wolf wave, and you get the contracts, the 170 calls, which are pretty much trading at 194. The spread is pretty nasty, so I'd probably go for the 175. Sorry, I go for the So I'm just paying attention to the strike interval. They changed from $5 strike intervals into $2.50, and then it changes to $5 at $2.10. So this might not be a bad asymmetric trade here if you get the 180 calls at 65 cents, and then they could quickly move to 264 by Tuesday. Okay, that's risking 100. So buying two of these contracts is going to cost you $120. And then if that IV is really true, indicating that there's a big move coming this week for Roku, then you can definitely see at least a $18, let's say $20 move from 152. That's a 172. That takes you right to here. That's a pretty big move. Okay, so let's say it goes from 152 to 170. Then these 180 calls will be worth about like $3. So think about that. That's something that may work. I'd be interested in getting, but the way to trade that is to watch the pre-market for Roku, and if it starts moving, and then the VIX starts dropping, then that's going to give you some sort of confidence to go take those long positions, but keep it low, right? You don't need to. There's no clean setup here other than that 78-minute wolf wave on Roku, I believe, with the regular hours. So that looks like it's already in cycle 3. So a reversal to the upside is probable now, and that would take it up to 184, but the short-term gap is 9% move to 167, 170. So so 69 cents, 69. That's Elon's favorite number. I think that's the time where the astronauts landed on the moon. 69 cents for those calls on the 170 calls, 170 strikes for Roku, and then with a 9% move, if this thing starts to move off of some sort of TTM squeeze, which I can't really see one right now at the moment. Like even on the 30-minute time frame, you can see a wolf wave on January 25th. What day is that? Tuesday. Wow. So it's saying, wow, this is actually a pretty not a bad setup if we conform this to a TGIF cycle, right? TGIF technically did not trigger for Roku, but when TGIF triggers, it just means like 62% probability. The odds of the probability of holding a long position over the weekend is around 57 to 52%. Because if it didn't have a higher probability of moving higher for the general markets, then it wouldn't be able to create a long-term chart where the market keeps on moving higher and higher and higher, right? In order for the market to move higher and higher and higher, it'd have to move higher and higher and higher over a couple of, in that during some sort of in one of those days. Like, is it going to be Wednesday, always Wednesday? Is it going to be always over the weekend? And I think it's over the weekend, statistically speaking, because that's where most people don't want to hold positions. But this is nice. I'll be watching Roku because, Roku is the foundation of this Discord room, right? But if Roku, if you know what the TGIF strategy is and you see like it's showing here, what is that, 4 o'clock a.m.? So 10:30, which time zone am I on? Toronto, so Eastern. So 25th at 10:30, right about here. We're looking for 173.23. Okay, I'll do like depending on how my NVIDIAs work and what the pre-market looks like for Roku, I might take that trade, like open up like 5 contracts for 69 cents and catch a move up to 173. That's 5 contracts at 70 cents a pop is 350. 350 turns into, what did I say? Up to 73 cents on Roku, $173 on those strikes would take it up to, let me just do the quick calculation here. Yeah, sorry, these servers are slow. Okay, so if we get the 180 calls, then 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, 6, 7, 8. So I gotta take, so from 180, I gotta move 8 down. So that'd be 1, 2, 3, 4, 5, 6, 7, 8. It'll be worth $4, approximately $4, $3 to $4. You buy something at 70 cents, it'll go to $4. Okay, so that's, if I buy 5 contracts for 70 cents, then that will be $350 or $400 after commissions. And then if I close them off at $4, then they'll be worth $2,000. So $2,000 minus my 400 is going to be worth 1,600, right? In profits. So that's a trade that I might look to take on Monday at the open, if I can catch it at the open. Because if it doesn't, if I'm not able to catch it, then my return on my investment, if I take that Roku trade, is going to be less because it's already going to be up quite a bit at the, if it's already trading here at 156, then those calls are going to be worth, the 180 calls might be worth like 90 cents. So I'd have to adjust my risk and not buy 5, maybe reduce it down to like 3 or 2, right? So if I can get in here, 10 seconds to close, I think Roku still dumped a little bit more. Yeah, so it dropped down $1. No, it dropped down another like 10 cents. So yeah, tomorrow morning it could be up 2% on $100, so that'll be up like $3, and that'll be at 150, 152, 155. So I'm buying those calls at 155. Could be worth it. It's a good shot for that thing, for that wolf wave. So this is the whole point of wolf waves, right? Instead of like guessing which one or looking at, who's doing what in their Twitter stuff. You just let the algorithms do it. I mean, I see people losing like money left, right, and center, and it's like disgusting. And I think I'm doing like a great job. Honestly, I think I'm doing a great job. I mean, I'm protecting everyone's account. I'm making money while the market's crashing. I'm helping people do the best to kind of stick with the system and focus on their long-term goals. And, still a big first world problem for a lot of people. Just understanding that you never really understand how to really beat the market until you understand who you are. Okay, so that's pretty much it. I think that's enough for today. I've got a lot of people actually, like a meeting set up for tomorrow. I'll be extremely busy, but I'll try to be on voice tomorrow morning. There's some big news coming out this year. I've just got to make sure I don't announce it too early, but it's going to be, I swear this is like my breakout year. This is my breakout year along with a lot of people who are with me. It's going to be a great year. And as you know, when the market corrects like this, they all make 52-week lows, and eventually they'll make 52-week highs. The next 52-week high that Roku makes, and Apple makes, and Amazon makes, everyone's accounts are going to be doubling or tripling. It was just a matter of time. All right, thank you very much, everybody. I've recorded this session. Once it's done post-processing, I'll make it available on YouTube. Thank you very much, and have a good night.